Okay, hello, welcome. My name is Roger Royce. I'm a corporate and tax partner with the law firm of Haynes and Boone in Palo Alto, and our offices, of course, are around the country and around the world. We're based in Texas with offices everywhere. We're here today to talk about agriculture technology, ag tech, and I'm very excited to lead a panel of investors and entrepreneurs and enthusiasts in the space of agriculture tech, ag tech. This is Founder World 2021, Silicon Valley, Austin, sponsored by Haynes Boone, but provided by SVE.io, F50, and Raise the Round. So for our ag tech panel here today, we have assembled investors and entrepreneurs. And before we get started, I think I'd like to let our panelists just introduce themselves and tell us a little bit about who they are and how they come to the space. F, why don't we start with you?
Thank you, Roger. Great panel today. So my name is Ephraim Lindenbaum. I'm the managing director of Advanced Ventures, a Silicon Valley venture fund. We invest across technology, health, and wellness. We've been investors in the ag tech sector since 2001, which makes us one of the oldest ag tech VCs out there. We've continuously invested across both food and ag tech as it's evolved with both the technology and the market space. We're involved with companies like Myco Technologies, Alpha Foods, and many others within the category.
Thanks very much. Gonzalo?
Hi, I'm Gonzalo. I'm managing director and founder of Arpegio. Arpegio is an early stage VC fund. We're based out of Santiago, Chile, and another office in Miami. We invest in early stage companies, technology companies that are serving the food and agriculture industry in Latin America.
Okay, great. And Aaron?
Thanks, Roger. Aaron Magenheim, AgTech Insight. We do a variety of consulting work. We have a global team of experts, work across food and agriculture. We help startups or scale-ups kind of move into their growth stage of their business and have a referral network that we've built. And we also have another business called Growers Insight, where we work on the ground with food companies and farmers and help them build and implement technology plans. So we're widespread across food and ag and work around the globe.
Okay, great. Well, we've got a good panel for this topic. So let me just start with what are the trends? What are we seeing now in the space of ag tech? And part of that is definitional. What exactly is ag tech? How big a tent is it? And where's the money going? Where are the opportunities? F, I know you've got some thoughts on this, so maybe you could kick us off on that.
Sure. So some of the PitchBook and CB Insight data last year suggested there was somewhere around 23 billion invested from a venture, early, and growth stage into the category. Now that really divides amongst two core areas, what we call food tech and historically ag tech. That is now becoming more of a farm tech element. So we're seeing, really a 3x on the food side as opposed to the farm tech side. And, really that comes out of after a number of years of early investment in the farm category. It is a fairly slow exiting space, which I think has pushed many of the investors to the food side, where you do get a little more involved in brands, where there is a much nearer term exit trajectory out there. However, the pandemic has really identified a lot of challenges that have existed within the supply chain, within much of the distribution elements of the, if you will, farm to fork dynamic that's out there. So we are seeing a renewed interest on the technology. There are predictions this year that we will see more than the 5 billion plus that went in last year. I believe the data suggested as of mid-year, roundly 4 billion and change has gone into the category. That was halfway through. So the expectation is we will top a 2020's number of 5 billion plus into the category. And I think there is renewed interest as many of these challenges have really come to the forefront within the supply chain.
When you say in the category, does that mean food tech or farm
that
tech?
Is specifically ag tech. Yeah, the if you will, the farm side of the ag tech spectrum. Total, we'll see somewhere between 17 and 20 billion into the broader food tech category.
Okay. All right. How about the rest of you? Any other trends you want to highlight here for 2021 that we're seeing? Aaron, you're kind of right down our boots on the ground. What's hot in terms
Yeah,
of,
so it's been interesting. I get frustrated because a lot of times we hear, farmers are slow adopters. That's absolutely wrong. They're the quickest adopters in the world. They're changing things day to day. You're bringing them the wrong products a lot of the time, but I feel we're getting closer to bringing the right products, and a lot of companies are figuring it out. So we're seeing a lot more consolidation in the industry. I do some work with Verdant Partners. I'm an advisor over there on the M&A side. And so, we're seeing some consolidation, which is good. We track over 4,000 digital technology companies around the world, and ag tech specifically. So there's just a lot of players out there. So we're seeing that consolidation. And then we're also seeing organizations kind of moving upstream. So from the farm gate, moving to the food side, and then having food companies push them back down to the farm gate. We're also seeing a lot of money continuing to go into the institutional investor side of buying farming operations and that type of stuff. And so that's another entry point. And so the adoption rate is going up. Farmers and food companies are realizing that they need to have a little bit more of a plan. And startups are realizing that they need to collaborate. Everybody's one spoke of the wheel. So as we have, whether it's M&A or whether it's just collaboration between companies, it's increasing adoption, and that increases revenue, which allows companies to raise larger rounds. And so, we're seeing the space definitely, kind of grow up, which is great. It's been a slow process, but I think things are starting to move a lot quicker.
it's still pretty early though, wouldn't you say?
It's still early, but we're at the point I feel like it's starting to become a real industry. So it's exciting to see that.
Before we leave that, you said something really interesting. You said you're seeing consolidation now. Has that happened, and has that changed? Because it seems to me it's still awfully fragmented.
It's still fragmented, but I mean the moves that companies like TELUS have been making, bringing organizations like, bringing what I think they made 8 or 10 acquisitions at least in the last year, companies like Conservice. I think that's interesting. You have Simios partnering or buying Ag World. I mean, those are, they weren't necessarily huge exits. They were decent, but, looking more at being able to consolidate technologies and get a group of companies together. The challenge is you go to a food company or you go to a larger farmer and you say, hey, I have this widget. And they're like, that's great. That's one of 100 things that I need. So if you can kind of bring that more consolidated thing together, arable. No, I'm sorry. Anyways, I'm blanking on names, but there's a number of companies in the indoor space as well that have been consolidating. And so as we're seeing that type of stuff, it helps for, it helps just show that the industry is consolidating. And what it means is that there's money behind the Simios, there's money behind these organizations that believe that aggregation is the way to grow. And so that space is just starting, and and it's going to grow quite rapidly. Devron is another one that's been acquiring a number of companies, and it just goes on from there.
Interesting. Okay, well, we'll come back to that. So Gonzalo, how are things south in the Southern Hemisphere?
Yeah, well, I have to agree with Ephraim. I think the pandemic brought up a lot of things. This is a sector that was kind of hidden away from everyday life, and a lot of people are not necessarily aware of what technology is being adopted in the farms or along the entire value chain. And I think the pandemic brought a lot of these things to the surface and made a lot of this more evident, right? And the necessity of having to invest and innovate in the industry is much more clear for a lot of people. This makes it easier for our LPs. It makes it easier to talk to other investors, generalist investors that go into the deals with us, and a lot of talent as well. A lot of entrepreneurs that are looking at this and saying, "Hey, these are problems that we have to solve." We were looking at kind of long-term or kind of medium-term trends in the industry, and the pandemic just pushed a lot of these up to the front of the line. In terms of things like food safety and traceability, reducing the dependency on long value chains or the long supply chains, and also the labor and automation and in the farm, in the restaurants, in a lot of places. Separate from that, I think a lot of the other things that we're seeing today is a general interest in climate change and the CO2 sequestration and trading and how that's going to create new sources of income for farmers everywhere, and kind of waiting to see where this is going to go and where this takes us and what standards are going to be used for, especially for things like trading or standards of for counting CO2 tons or CO2 equivalents. Things like biotech has also been very interesting, and we see a lot of things here in Chile, also in Argentina. A lot of technical founders coming out of universities, joining up with business, co-founders, and taking this to a global level, like seeing actual global, world-class innovation coming out of some of these countries down in South America.
Yeah, that last one's a big one. Not the last one. You mentioned the climate change technologies, and that seems to be maybe that was a thing before 2021, but this year it just seems to be people are very, very sensitive to the role of agriculture in the environment, and how they can how technologies that might solve an agricultural need also address climate change challenges. That seems like especially now that we've got so many ESG funds, right? So many funds are very focused on environmental, social, and governance. Ephraim, how about you? Or do you consider that? Do you think about ESG when you make an investment? Does that make you more inclined to want to invest in somebody that might be doing something that has an environmental impact?
Yeah, certainly it's a factor there. I mean, we're very active in alternative proteins. Our company, Mycotechnology, has the most efficient protein production in the world. It's now moving into utilizing waste streams from around the world to create protein. So, that really moves a level beyond, and that's in the fermentation side of the food and ag world. So, there is a lot going on there. I mean, I think where the rubber meets the road, and, really Aaron's a strong expert, and Gonzalo brings a different perspective as well, that, here, in what is arguably California, Central Valley, the most efficient, effective, growing region, if not in the world, we're seeing a ton of challenges. I mean, this, inflationary supply chain problem is actually pushing down on farmers in a very, very challenging way here, specifically in California. As we've seen transportation costs go up, as we've seen supply chain hurdles exist, all of it has been pushing down on the farmers from what we've seen. So, one, all of the transportation cost has gone up. Two, transportation has become a challenge, meaning that, many of those drivers have gone to the ports to do, traditional consumer goods, moved out of the ag space. Beyond that, when the supply chain jams up, when you're dealing with a perishable crop, you've got a shorter lifespan on the shelf. So, the pushback is if the product is going into the channel, it's ending up at a retailer. And if it gets to the retailer because of the supply chain challenge, and it's not up to their quality standard, they will reject it and no one gets paid. And the farmer still pays for the transportation to have gotten it there in the first place. So there is a huge push down. So, going to a farmer with some new widget, to Aaron's point, even a whole system right now is not getting a lot of traction, right? You've got to go in there and solve a burning need with the house on fire that they're not going to get over the hump till tomorrow on. So, to that point on ESG, look, when your house is on fire, you're not worried about how much smoke you're putting out. You're worried about how much water you can get on to save your house. So I think that, we've got a real issue going on there. The farmers tried a lot of different things, maybe direct sales over pandemics, all kinds of stuff. And I think many of those were bad experiences for them. So, right now, stabilization in the category, I think finance is very important in there. Finding the areas where you can actually save money for the farmer is probably the number one category we're seeing.
And I think it's interesting to jump on that. As I've sold lots of technologies through the years, I was always trying to sell this widget or that widget. And as we've taken that wider viewpoint through Growers Insight, really looking at the entire organization and where their problems are and helping solve those, it's an approach that startups can take as well. So you may not get that sale today or this week, but helping understand what that customer needs and building your kind of ecosystem around you to say, hey, I know that you don't necessarily need what I'm selling you today. It sounds like that's on the lower side of your list, but I know someone that can help you out with your problems, with the top two things on your list right now. Just having kind of taking that step back, and we get so focused on our thing and what we're trying to accomplish. And if you take that step back, people really appreciate saying, hey, there's a company I've heard about, or there's a company that I work with that can help solve that problem. And they'll come back to you, that will get them back into your door really quickly. Whereas if you just try to keep selling your product, it might be years before they're ready for it. So, like you said, there's a lot of things going on. Labor has just, California's always had a labor issue, and now everywhere I go, I don't care if it's Midwest meat packing houses, I don't care if it's Northwest apple packing houses. Everybody's having labor issues, and so taking that step back and helping understand what the problem is and making some connections there is a way to build your trust and relationship with the customer. And again, this is ag it's you build long-term relationships, and it doesn't have to be a long sales cycle, but it takes a while for people to get to know you. So the quicker you can help them solve problems, the quicker you're going to get in through their door and keep that relationship going.
Yeah, I want to really riff off of something that Aaron mentioned, because he really is an expert in the category. And I think this is something that's very important when you're a startup founder and you're looking at the ag space. You should really resonate with what Aaron said, because if you're looking at a situation where it may take years for a farmer to be interested in your product, you should be looking at a different product, because the venture space is not tooled around a long-term developmental sales cycle. That is not what venture is about. We are in a 5-year out exit. If you can't do it in 7 max, you're dead to us in a lot of ways. And ag has been a real problem, and that's why there has been the pullback over time with LP investment in ag, because we haven't been able to get to the finish line there. So really resonate as a founder with what Aaron is saying, and really do your homework before you go get money. Understand where you fit into the ecosystem. And to Aaron's point, if it's going to take you 3 years to sell something to a farmer, which is the average in the ag space, maybe you need to be thinking of a better way to do it. Maybe you don't need to sell it to the farmer. Maybe you sell it to someone else in the supply chain, and the farmer's the end user of the model. So I think creativity now in the startup side should be item number one, because people get fixated on solving these problems or trying to integrate. And at the end of the day, Aaron's right, you have to be their friend. But when you're taking venture capital dollars, building a multi-year relationship is not something that is in line with the capital you're bringing in. So you either need to build those relationships up front and bring them to the table, or you need to have a solution sell that's going to get in there and get it into play and generate revenue in the near term, or you should be thinking of doing something else.
Is ag tech suitable for venture then? There's been a lot of chatter.
It's been an issue, Roger. I mean, I think the key is making smart decisions and finding the areas to do that, right? I mean, one could step back and look at what's happened with, drones, or what has happened with some of the farm machinery. What happens is every couple of years there's a win, and everybody kind of rallies around that flag on the venture side, say, hey, look, we can deliver 10x returns in the category. Unfortunately, it's few and far between. So I think it's very, very important to work hard, as a founder, to find those, models that work with venture. And, you don't have to take venture capital in order to be a startup. So there are different kinds of businesses, there are different kinds of models, but you have to be like, kind, and aligned. Meaning, if you take venture capital, you've got to understand our constraints, and you've got to align that. And that's where there was a real breakdown over the last, I'd call it 7 years in the category. And I think many of us that were investors have been lucky that on maybe the food side, or the alternative protein, or some of the more highly specified categories have really saved us in terms of the return levels. versus the broader spending into technology in the ag space, and I go back 20 years in this category where, trying to move tech into has not changed dramatically. I mean, it's still a kicking tires with the Farm Bureau folk to get a product across, and, it just doesn't work.
Yeah. Gonzalo, are you seeing the same kind of challenge in your fund?
Yeah. Yeah, I think that's a good point. Like, I think in general, you have to make sure that if you do go the venture way, that you're sure going to be able to get those returns that venture capital looks for, and think about these limited time funds, closed-ended funds that need to exit out of your with these 10x returns, right, for each deal, and we have to be careful as investors sometimes, because we get questions. At least I get questions of how they could better align to what we ask for, when venture capital might not be the right way for them to get funding. There are other options. I do see a lot of that of this timing thing, and trying to get things earlier, and not only in farm in ag tech, but in biotech as well. And we were looking at this cultured meat company that was doing something and shooting for the moon, but has a medium term and a short term product line as well that came out of the original technology. But they're already, they already have sales. They're already moving along and growing pretty quickly. And I think even if they stayed with their 1 and 2 products, they'll be good. If they shoot for the cultured meat product, excellent. But I think that's something that's good to keep in mind in the industry in general. This happens, I think, everywhere. We see this in Latin America, and I'm sure it's everywhere else as well.
A shift that I've seen that I'm excited about is in 2014, when I met Roger and started spending time in Silicon Valley, I saw that investors were really focused on IP and build IP, build IP, build IP. And that's how they thought they were going to get their exits. And today that mantra has changed quite a bit to get customers, get revenue. And so when you look at your product mix, it's not necessarily the moonshot, super cool, like we're going to exit because someone wants the IP. It's more we're fixing some fundamental problems. It may be dumb, stupid, simple tech, but today in specialty, we don't know where our tractors are, where our people are, how much we irrigated, how much fertilizer we applied, how much yield we got for the most part. So we need to fix some stupid, simple problems. And that's a quick ROI that you can show to a food company and a farmer. And so kind of shifting towards looking at an exit from, hey, we're doing some good revenue and someone wants to buy our customers. That's an exit strategy, rather than, hey, we've built this super cool IP that, is going to take 5 years or 10 years because the industry's not ready for it. So I've just seen this shift that's been really positive, because I want to see companies doing $50 million in revenue, not a $50 million exit.
Yeah, I mean, even 50 million isn't compelling enough, honestly, for most venture folks. I mean, what I will say, Aaron, and you're spot on. I mean, I think it's whenever you see, entrance from, the broader technology space into a vertical market, you tend to see what you saw, which was, is the technology going to rule the day, whether it's IP or tech or et cetera? And I think what we've seen now is that hasn't been the case. Now, what we're looking at are areas that are really evolving as, and I love Aaron and Gonzalo's take on that, are areas that I think we're seeing as being very important in the category. Number one, certainly labor automation, but being able to do that. The one thing I think we're most excited about is machine vision AI. One of the biggest issues we've seen in this category is data input and output. To Aaron's point, if you don't get the data in, nothing else works. And getting people, especially a very degrees of, skill sets in the ag space to input the data in an effective way is a huge issue today. So, when you look at things like, inputs, when you look at things like yield levels, that relies on humans to make a judgment and input call, right? And that is the fundamental breakdown in a lot of cases. The more you can take that out of the human's hands, now the cameras on your mobile phones are strong enough that with high quality machine vision, you should be able to take a picture of that input product sitting on the ground with 3 buckets or 3 drums, and from that data, be able to tell exactly what went in, thus eliminating the human. The human comes in and says, well, maybe I put 3 55-gallon drums in there. Well, maybe it was 2.5. yeah, one kind of knocked over and spilled. And, at the end of the day, none of that makes any of the great tech work. So at the end of the day, utilizing tech to solve critical baseline problems like input data, output data, second movers, I think we're starting to see in different ways, where the nice to have ag drone data is much more interesting from a must to have input data to replace field vision, pickers in the field coming back and saying, yeah, I'm only getting 2 or 3 heads off that lettuce. Well, the reality is maybe there were a few more in there. Maybe they, just didn't have the head count they promised in the field.
Okay. All right. Well, that is a lot of really good information. We could talk about this all day, I think, because there's a lot going on in the space. I really do appreciate your comments. Any last words of wisdom before we sign off here, Gonzalo or Aaron, that you want to add to what Ephraim has just said?
From my standpoint, just build your ecosystem around you, get to know collaborative companies up and downstream, and look at what that bigger problem is. We're starting to do implementation for software companies. They're realizing that that they want to work with like the tech industry, and so just kind of look at how you can build your business and focus on what you do really good instead of trying to do too many things, and make those collaborations, whether it's sales, whether it's API and data, but make those collaborations and build those relationships, and that's how you'll build your company.
Okay. Gonzalo,
I really not much to add to what Aaron and Ephraim said, but I would want to highlight a little bit about Latin America and what's going on here in terms of agricultural and fisheries exports. And they're the number one exporters to the rest of the world. And I think there are a lot of opportunities for startups from the US, from Israel, from other parts of the world. They can find a huge market here for ag tech and some of the local stuff of the consumer market as well. So take a look at that. Take a look at Arpeggio, and we'll be happy to talk with you as well.
Okay, great. How do people find you?
You can just write to Gonzalo at Arpeggio with 1G.vc, or you can go online to our website, arpeggio.vc, or just look us up on LinkedIn.
How about you, Aaron? How do people get a hold of you?
Yeah, agtechinsight.com, Aaron M at agtechinsight.com. We have a lot of resources on the website and stuff like that.
Okay. And Ephraim, how about you?
Sure. Easiest way to get in touch is advancedventures.com. Also, Twitter is great, at Advanced Ventures. Follow us there. We're always talking about things we're thinking about, and certainly LinkedIn as well. You can reach me.
Okay, I want to thank you panelists for being here. This is Roger Royce, partner with Haynes and Boone, and I'm coming to you with the EgTech panel for Founder World 2021, and we'll see you at the next panel.